And we're delighted to welcome you to the third Zephr launch webinar this week. We're celebrating the launch of our new software with some fantastic speakers talking about some of the hottest issues in our industry right now. And of course, we're pleased to welcome David Rowan, who is hosting our webinars and providing insight and questions as we move through each discussion. But first, I just want to direct your attentions to the Q&A box at the bottom of your screen. We are open for questions today, so please add yours there, and we'll pick the best to put to our guests throughout the week. Also, you'll be muted, so get the volume up and let's get on with the show. So firstly, I'd like to introduce you to David Rowan, a legend in the industry. For those of you who don't know him, David was the founding editor-in-chief of Wired magazine, and he's been at the heart of the tech and startup ecosystem ever since. David has been a technology columnist for The Times, GQ, Condé Nast Traveler, and The Sunday Times. And he hosts a new podcast series about tech founders called Walk with Founders. David is a best-selling author and a true authority in the industry. Joining David today is Matt Lindsay, president of Mather Economics and an important partner of Zephr. We work alongside each other in some of our key customers in the United States. And much like myself, Matt is a huge advocate of data-driven decisions. He has over 25 years experience in this field, and Matt's organization has a tremendous track record of delivering competitive advantages through intelligent applied economics. Mather are also behind the SaaS product listener, a data intelligence layer that can personalize and optimize a customer's life cycle. And of course, it works wonderfully well with the intelligent customer journeys deployed from Zephr. I always enjoy talking to Matt. He's got vast knowledge in this media and subscription space and will be hugely insightful today. So to that end, I'll hand over to David, who can get us started.
Thank you, James. Hello, everybody. I just want to reassure you that even though we're on Zoom, I am wearing trousers. Pants, I think the Americans call it, because we have a global audience. Welcome back, anybody who's been with us for the last day or 2 days. Not just people in James's immediate family and people who work for Zephr. I think we may have some people who come more than once a week. So we'll do a loyalty scheme. Today, the format's pretty simple. Matt has about 15 minutes to share some stories, to present some data, to give us some conclusions of what he's finding. And then I'll tease a couple of extra points out of him. But then the main part of today's session is the questions you want to ask. So if you see at the bottom of your screen, you'll see a Q&A box. As Matt is talking and afterwards, just ask any questions and then I will put them to Matt towards the later part of the session. And we should finish after about 40 minutes. We'll see how it goes, but we don't want to keep you for too long. Very, very concentrated, punchy information to share. But the main part of the show now is Matt, and he's going to be talking about how to grow subscription revenue in a time of crisis, which we may be in at the moment. So Mather Economics gets data from about 30 million households a week, manages about $6 billion of client revenue, and they've done some fresh research that they're going to share on media disruption. And we're going to talk about everything from metered paywalls to the impact of the crisis on call centers, what it means for print as well as digital. Matt has done lots of things. He's also an author, How to Succeed in the Relationship Economy. But now he's going to be a presenter and tell us the secrets to growing subscription revenue when there's a virus out there. Over to you, Matt.
Excellent. Thank you so much. Let me see here. Excellent. So thank you very much for the introduction. It's a pleasure to be here. And I will keep this, as David mentioned, to roughly 15 minutes. My goal here today is to provide some fairly tactical and helpful takeaways that you can use to improve your performance right away. The first half of this presentation is really about the kind of acquisition and then of new subscribers. And then the second half is really talking about once you have them, how do you maximize the revenue from those customers? So I will be more than happy to share this presentation with everyone afterwards. So feel free to, you don't have to take comprehensive notes, we'll be more than happy to send these. And some of these slides have a lot of text on them, and I won't be going through all of it. But essentially what the crisis is doing is it's creating, as we're all probably familiar, a spike in the demand for news. And so what does that mean? I'm an economist, and so we're familiar with demand and so on. And so there are some implications for what is that, how does that change the economics of digital subscriptions? And first and foremost, it's really tilting the table in favor of subscription revenue. And to the extent there is an opportunity cost of advertising revenue lost from perhaps losing some inventory by tightening your paywall, in today's market, there's such a flood of supply in the realm of advertising impressions that the actual effective CPMs have dropped. So both of those factors really make subscriber revenue much more compelling. There's also a lot of initiative to convert existing, to the extent you have print readers, and most of our clients actually do have print subscriptions and quite a significant amount of revenue from print subscriptions. How do you actually get those people to migrate to the digital product? And so, as they say, don't let a good crisis go to waste. I think this is an excellent time to take a stock of your strategy in a number of ways, particularly when it comes to acquiring subscriptions, and particularly digital subscriptions. So what we will like to do today is to talk about kind of what we anticipate being some phenomenons you'll soon experience. You're probably already in the throes of the spike in demand, and then we'll talk about what will likely happen afterwards and what's the right things to do now while you're doing that. So just to give you some kind of data, as David mentioned, we work with hundreds of publishers, and we aggregate data from those publishers, and we provide some trends. And in this the next few slides talk about kind of the difference in some of these metrics from February to March, which is really at the beginning of this crisis, and then subsequently from March to April. These data are really only a week or two old. The second half of the data was as recent as last week. But these are all metrics you can see that are common when you look at traffic. There's users, known users, new users. Different fanatics are what we call the most engaged segment of readers on a site. And then there's paywall hits. And so you can see that the change in the dark blue is actually what happened from February to March. And then the light blue is from March to April. So the number of conversions is up really dramatically across all of our metrics. You can see that the actual number of conversions is up over 200%. Most of that is actually coming from the conversion rate itself. So people are being presented with subscription offers, and they're converting at a much higher rate than typical. There are quite a number of new users on the site, so and that's important, as I'll describe in a moment. This is another, you can see incremental growth this month over month. So in March, the conversion rate went up 49%, and then in April, it went up an incremental 87% over the already increased level from March. Same with conversions. Paywall hits actually grew tremendously in March, but then sustained that level in April. And you can see the growth in fanatics continued. So fanatics are typically people that are on your site multiple times a day, and then they're spending a considerable amount of time reading content. New users are brand new that we have not seen before. And then there's known users, and known users are a very important metric that we are we'll talk about the importance of why that is soon. You can also see how the content related to COVID-19 is affecting the mix of content on sites. So we have you can see that in February, they were only 2% of the articles. In March, that percentage went to 16%, and then in April, it's almost half of the content that people are actually consuming are around COVID. Same with page views, except even probably a more dramatic trend. And then we have a metric called path to conversion. So it's really an attribution of conversions to content. And so any article that a user has or a visitor has consumed that ultimately buys a subscription, we give that article some attribution. And that's what you can see how COVID-19 content has really been pretty dramatic in its path to conversion in the month of April. That being the case, I think it bears mentioning that there are actually people on your site that are not interested in COVID content, and these should probably not be forgotten. You can see here there are, if you break this out, there's about half or a third of your content or your audience in March was COVID only. There's about a quarter that are COVID interest, and then there's about maybe 50% of people that are there. They follow COVID, but they're also, perhaps reading other things as well. So there's tactics, and to the extent you can personalize your relationship with a reader, that's really where we find it makes a world of difference in conversion rates. So knowing if somebody's trying to actively avoid content coverage, perhaps presenting them with an offer that's maybe themed on some other topic would have more success. And these are some of the tactics that we've and creative ideas that we are observing at our clients. So not only are people having kind of a metered paywall or premium offer, there's actually people have used what we call a hard registration wall, which is really a way to get people to give you some information, identify themselves in return for access to content. So it's a non-monetary transaction, but it's one that we feel is very valuable. So don't lose the opportunity to grow that relationship by getting some sort of email address or other type of ID. There is a hard paywall. This is actually typical in more countries where there are publicly funded alternative news sources like the BBC. In the United States, where there's not a government source, it's not as common to have all of the COVID content behind a paywall. But we do feel that it's important to have some of it behind the paywall, and I'll talk more about that. We also have partnerships. There's this growing appreciation for brands. We're finding news brands have never been stronger in these types of crises. People really trust their newspaper or their news source, or really any type of publication. So there are opportunities to partner with other businesses in your market and have some sponsored subscriptions or so on. And then lastly, there's a significant number of people that will donate to a newspaper or a news organization because they want that organization to exist. There's people that just want to donate to the cause of journalism, and therefore, perhaps giving them an opportunity to subscribe or to contribute is a tremendous opportunity. So here's some interesting data that we've done a somewhat kind of what we call event studies in the past. So this is actually a Super Bowl, but there are similar patterns we've observed in natural disasters or crimes or really elections. There's a lot of patterns that are similar. COVID will, not to compare COVID to a Super Bowl win. I think, obviously they're very, very different. However, there are some insights that we'd like to share. First and foremost is that when there's a spike in demand, if you recall your economics from school, typically what that results in is an increase in price. And you're seeing that in a lot of areas of the economy now. The interesting thing about news is that there's this journalistic mission. And so we're not necessarily advocating that you raise the price of your products during this time, but what we are advocating is that you don't need to be as aggressive with discounting your subscriptions. So there are times when discounts are appropriate and perhaps times when they're not. We would say that right at this perhaps moment in time, you're going to convert quite a number of people without the use of aggressive discounting. So we also know that there will be a post-crisis period of time, and there will likely be a reduction in your subscriptions. So in this example you see here, subscriptions really peaked in this market right around the time of the Super Bowl. And then afterwards, there was a prolonged period of lower than average subscriptions. And the reason why this is, and we've actually had this validated from other research, is that when you have these demand spikes, you're accelerating the conversion of people that are already in your subscription engagement funnel or engagement ladder, whatever you'd like to use. So what happens is after you've accelerated those conversions, you then have essentially an empty funnel, and you need to refill that funnel. And there are things you can do to accelerate that refilling. And first and foremost, it's getting these known users. So people in the sequence to conversion, it's typically, introduction to the content, becoming known to the publisher, creating a habit, and then subscribing. So the things you can do today during this spike are make sure you initialize that known relationship, and then begin to introduce other types of content to these readers besides the COVID content. and then later on, perhaps use a promotional offer to convert these people down the road. And so this essentially, this text is kind of what I've covered. So, but it's an important concept that you do need to have this kind of plan for the future today, because you can actually lay the groundwork for future success during this time. And I won't go into all these tactics, but just to make this very helpful, as I mentioned earlier, there's kind of combining the concepts of different types of segments and then tactics at different parts of the funnel. So you have kind of the top of the funnel tactics with brand new users, the high propensity or non-subscribers, but very engaged middle of the funnel. And then you've got subscribers. And so these are all things that you can do with these types of readers. So just to kind of, we've talked a lot about acquisition to this point. What I'd like to talk about now is once you've converted them, what are the right things to do? And again, I'll share some benchmarks. But the idea is that really retention, investing in retention is a big topic these days. And in fact, we've typically found that publishers underinvest in retention. They overinvest perhaps in acquisition. But once you have a subscriber, it's much easier to retain an existing subscriber than it is to find a brand new one. And what we found is that there's some insight as to what content has value in different reasons. Some of it's advertising, inventory generation, some of it is in conversion of new subscribers, and some of it's in retention of existing subscribers. What we've found is that generally a subscription purchase is an act of there's some inertia there, and this content that overcomes that inertia is valuable from a conversion standpoint. So sports victories like Super Bowls are examples. Crimes are one, scandals are another, politics or elections is a good example, and certainly any type of natural disaster or global pandemic, which is what we're seeing now. That's content very helpful for conversion. In many cases, that type of content is not helpful for retention. You're really looking for is content that is habitual consumption. So opinion content is typically helpful from that perspective. Leisure or content, local news is also very typically helpful because people like to read about their community. So understanding how to introduce this kind of habit forming content to new readers is an important tactic. Also, the mechanism by which the customer joins your subscriptions is another important tactic. So people that come from a voluntary where they initiate the subscription by hitting a subscribe now button, they typically, as you'd expect, have very good retention. People that hit on some sort of metered access also have good retention because they've typically hit that meter multiple times, or also when they've already consumed on average 5 or 10 or however many articles per month. People that can convert off of a premium article tend to have less retention because they're not as typically engaged as people that are coming to you from a meter. They're really subscribing because they want to read that one article, or that they want to have access for a period of time. So people that are really converting off of a premium article, really ones that need some extra focus on retention. So just to kind of give some overall metrics for digital subscribers in March, you can see there was quite a volume growth in the entire, new starts have grown quite significantly. And what does that mean in terms of the entire growth? So overall in March, about a 3.3% growth. April, you can see that growth accelerated. You can see the effect of rate. The rate in April actually declined. There were some promotions that were going on, and just the overall share of total subscribers that are on newer offers is what's causing that. The average monthly rate of a digital subscription, you could see actually declined, as you could see there. Start volume as a percentage of total actually went up. Stop volume actually declined in April. So starts are up and stops are down. That's resulting in a higher retention percentage and revenue growth. So overall, a very strong story for digital subscriptions across our client base. When we break this out by size of publication, you can see some interesting trends. Publications that have over 25,000 digital subscribers actually saw the greatest increase in subscriptions. Also, people that are on the lower end, less than 500, as you can imagine, the denominator is smaller, so it's easier to have a higher percentage increase. If you look at the average rate growth, you can see that the over 25,000 subscribers that had the greatest increase also had the greatest reduction in average rate, which is also not unexpected. given that newer subscribers come in at lower prices. When we look at retention, it's interesting. You can see that there's been retention improvements across the board, both in March and April, and a little bit more balanced. So in this case, the retention's not really statistically significantly different from each other. So strong retention performance in both months across the sizes. So to conclude, just in the last few slides I have here, I wanted to talk about kind of an interesting area that we work with a lot of publishers on, which is, now that you have this relationship, how do you really maximize the value of the customer relationships you have? And one of those is obviously in pricing. Many industries are very sophisticated with yield management, and subscription pricing yield management is really what we do for most of our publishers. And we find that any type of segmented pricing or targeted pricing is very helpful. You can take into consideration a lot of factors, and into this market in particular, you'll have different subscribers with different economic stress. So to the extent that you can identify customers who have different needs from you, economic needs, then you can reflect those in different types of pricing strategies. That's usually a very powerful strategy that has a high ROI. And this is an example here. So we do a lot of A/B testing, where we actually will take an across the board kind of what we call business as usual increase, and we'll give a target group, everybody gets the same increase, and then we actually will do a holdout group where we don't increase a subscriber as price, and we can compare the stops over periods of time and measure price elasticity. And you can see in this example here that if we just do this A/B test where you compare an across the board 5% increase to a holdout group that doesn't get an increase, the incremental stops are pretty different across tenure groups. And so what you'll find, not surprisingly, is people that are in their first year of a subscription, they're as much more sensitive to price than people that have been around for 4 or 5 years. And so generally a great place to start is to be very ginger or tentative with giving big price increases to people that are in their first year of their subscription. So that's an easy insight, and one that we will obviously share. There are other big predictors of price elasticity. There's engagement, especially with digital subscribers. And as I mentioned before, there's kind of household, socioeconomic factors. So these are all things to consider. And just to give you kind of a sense of the ROI, I know there's a lot of text here. I won't go through it, but if you were to actually compare a more sophisticated pricing strategy to an across the board strategy, you can see that it typically will reduce the price elasticity or the price stops due to a price increase by about half. And that makes a tremendous difference in the bottom line or the yield from pricing. So our general advice is to even moderate amounts of sophistication, moving away from a one-size-fits-all pricing strategy to a more sophisticated one, generally has a wonderful effect on your bottom line. So just to leave you with some next steps and to-dos, this is my final slide. We've kind of consolidated best practices into basically, in by and large, we are deep believers in the journalistic mission, but don't necessarily give away all of your COVID content for free. If you do have premium content, we recommend that you put that behind the meter. The content that you do give away for free related to COVID, we recommend it counts towards some sort of meter. We also recommend, registration walls, getting people to promote newsletters, starting to build that relationship. We also recommend beginning to encourage, digital activation from your print readership. That's a trend that's been going on for years, but it's particularly accelerated recently. Start to establish the relationship with these new subscribers that you have through the tactics I've described. And then to current readers, repeat users on COVID, introduce new types of content as I described. And then finally, just consider some of these more sophisticated analytics around the economic relationship that I described, personalizing renewal offers, and perhaps trying to anticipate who's a higher churn risk and taking some proactive measures on retention, but then also on price. So I think I'm within my 15 minutes, at least I hope I am. So I will stop talking and more than happy to answer any questions.
Thank you, Matt. And we'll welcome questions from the crowd. Just type into the Q&A box. This all sounds like it's been a tremendous opportunity, this virus, for the media, which had been struggling for a bit. You make it all sound very optimistic and upbeat, but there's a context, isn't there? A lot of the advertising and sponsorship and partnership revenue is falling away. Based on what you're seeing, how optimistic or pessimistic are you over the business prospects of your clients after we get out of lockdown?
You know, I'm obviously very, you know, we're enormously invested in the success of the media business, and also I feel that it performs an absolutely critical role in society. So I think there's, you know, we are generally optimistic. We find that it has a unique relationship with its communities in many cases. There's certainly advertising is an important role that it plays, but we find that the price elasticity, to use an economics term, is pretty low. People will pay for local news coverage. I think that there's going to be clearly is some pain that the industry is going through. We generally find that subscription revenue is much more stable than advertising revenue. So to the extent the industry can migrate to more of a subscription-based model, I think that in the long run is the right direction, and one that will perhaps insulate it from future shocks that are like this one that we're going through.
Have you seen any interesting experiments in boosting subscription and raising customer revenue generally that are exciting you?
You know, we do see a lot. You know, I think there's a lot of innovation around product. You know, one of the wonderful things about digital news is that you really have a much more insight as to what people's consumption patterns are, and so there's a lot of product innovation that's taking place. There are paid newsletters. There are special editions. There's models that are, you know, combining experiential, like virtual wine tastings, where you'll have a wine writer and he'll host a Zoom meeting where people all try the same wine, and just, so there are some really kind of neat things that are this period of crisis where everybody's stuck at home. There are some kind of nice experiential, but also membership kind of community building type of models that are starting to happen.
Are there any particular publications that you think people should have a look at just to get a sense of real innovation happening?
Oh, wow. Well, you know, there's obviously the big global brands that are out there people are familiar with. The New York Times is obviously doing wonderful things. The Wall Street Journal. You know, in the United States, if we look at regional publishers that we work with that we think are doing a good job, there's, you know, the Seattle Times, really there's many. There's the New York Times is one. I'm sorry, the Philadelphia Inquirer, Newsday. There's the Dallas Morning News. There's really Los Angeles Times, Minneapolis Star Tribune is not a client of ours, but doing quite well without us. So I'll mention them as well. So I think in Europe, there's, you know, there's lots of really phenomenal examples people are used to hearing about, you know, Schibsted, Politiken in Denmark, NRC, the Media House Properties in Belgium and in the Netherlands, the Telegraph, NRC. So there are some, Le Monde in Paris is doing quite well. So many examples.
You seem to suggest in some of your data that it's the bigger publishers who seem to be benefiting the most from new subscriptions. So is that something you think we're going to see leading to more consolidation, more big companies squeezing out the little guys?
You know, actually, I'm not sure about that. We find that you know, the value proposition of a digital subscription is easier to understand for a global brand like the New York Times. They're writing so much content on a daily basis that it's, you know, you know, if you compare them to a local newspaper, you know, I live in Atlanta, Georgia. The Atlanta Journal-Constitution here in town is also a very wonderful, very well-written publication. But the value, you know, I subscribe to both. And what I get out of the local paper here are local stories that obviously don't, you know, for me, they're important, but there's perhaps the scale is not there. So I think you have to think in terms of, if you're a local publisher, what is my what is my value proposition? How can they monetize? How can they monetize me? How do I complement these? The people may have multiple digital subscriptions, and so what's unique to their local community that they can offer?
You mentioned that some publications have tried a donation button to get their readers supporting journalism as an end in itself. Now in the UK, I think The Guardian's been pretty successful in this. How significant has this been, particularly among the publications you've been working with?
It's actually not. I mean, I would not say it's a growing tactic. I think to mention a group that is doing this is the Advanced Publications in the United States. They've introduced voluntary or contribution subscriptions, and they've had success with that. And I think that speaks to the fact that there are there's a demand for people want to support their local journalists.
So let's take some questions from the room, the virtual room. So the question from Dominic Cameron. We talked about news stories, about conventional word on digital page or print page. What about video and podcasts and the other varied formats in building up recurring revenues in your client base?
We have a significant number of people we work with that are adding video elements to their subscription offers. We find that they're complementary to the content. There's people like to consume video in some ways. So I think we haven't necessarily seen anybody that is just totally supporting the business model off of podcast subscriptions, but I think it's an important tactic and it's complementary to the fundamental subscription that people offer of news and journalism access.
To what extent are you seeing the factual podcasts generating revenue, subscription or sponsorship revenue?
Podcasts are, they're an effective, in my opinion or my experience, they're an effective way to build relationships. So in many cases they may be free, but they're a way to start to, get the habitual consumption of content from a particular source. I know that they're really relatively inexpensive to produce, and so in many cases they're an effective tactic. Does not cost a lot to generate content. On the other side, I don't know that they're a tremendous money maker. There are a few that are very popular, but generally I think they're still worthwhile even if they don't generate tremendous amounts of revenue.
Lisa Bradley is asking to what extent you need to track usage to understand better the acquisition journey. So if you could explain a bit about this process.
So this is an interesting, concept. I mean, really the tracking of content is really helpful in the sense that you can personalize the message. And so being able to focus, the theme of an offer perhaps can be local news, national news, sports, COVID coverage, for instance. I mean, all of those things are, the more you can make the offer compelling to an individual, the better it will perform. So we find that tracking usage is helpful in that perspective. We do also find that, anonymous users, sometimes you have to be careful about what you think about an anonymous user, especially in this era of third-party cookies going away. So, there's just moving from unknown to known is an enormous improvement. And I've seen, a benchmark is 4 times as likely to convert a known user as an unknown user.
Rav Roberts picked out something you said about users subscribing from all channels, not just the paywall. If you can clarify briefly where else people can subscribe from.
So there's, click-throughs on email offers. There's if you receive an email and usually if you click through there, it takes you right to the paid payment screen. There's a subscribe now button often on the home page. There's, those are typically the ways that they come through outside of a meter or donate button.
Okay, and just maybe 1 or 2 last questions. We're going to be working from home probably a bit more than we were before this virus came along in general. Dominic Cameron is asking that if there are more people working from home, do you think that's a different cohort for local media to make some money from? Maybe they'll be creating Zoom-like community gatherings and, you know, next door type local ways to connect your street with the street next door. Do you see anything like that happening?
I believe that is an interesting phenomenon. I absolutely agree. There's some opportunities there. We, you know, generally see many more people consuming news than previously, and I think that is a large part because they're at home and they're working from home and they have, you know, much more time in the day to do that type of thing. Or so I think there's innovation. I mean, that's as I mentioned earlier, innovation in the product offering is really exciting to see, and I generally think, you know, there's a lot of potential there for virtual communities and so on.
Lots of practical takeaways, lots of informed background, packed with data, a very up-to-date survey. Thank you very much, Matt, for your time. Thank you everybody for joining in and for engaging. And Zephr is bringing us back again tomorrow at the same time, 3 p.m. UK time. And the boss, James Henderson, will be here. And I'll be in conversation with him about what he and the team at Zephr are seeing. In the meantime, it's been a pleasure. Thank you, everybody. May your subscriptions and monetization plans boom.
Thank you very much.